Hey everybody, welcome to the Ask the Lender show. We have Kathryn Vatsula here with Loan Depot once again. And today we're going over a loan program that it's the first time here on the Ask the Lender show from what I understand, and that is the reverse mortgage. Many people have heard about it, but may not know all the details. So Kathryn's here to break it all down for us. What are a couple ways folks out there can utilize the reverse mortgage?
Good question.
Yeah.
The reverse mortgage can be used for a refinance and for a purchase. So I'll cover the home purchase.
Okay.
Yes. And I always like to give an example. So let's say you have, I always say, elderly couple on the reverse mortgage. Let's say you have a married couple, one of them has to be 62.
Okay.
They've owned a property for a long time and they have a lot of equity. But let's say it's a two-story home and it's not working for them anymore. As they get older, they're concerned about the stairs and the house in itself. Now, they want to move, but generally the question they always say is, well, I don't want to move and have a large mortgage payment, even though they might have a lot of equity.
Okay.
So what you can do on a reverse mortgage purchase is they can sell their house, take the equity towards the new purchase, and you can set up the reverse mortgage so that they don't have a mortgage payment that they pay. So that's the difference with a reverse versus like your standard conventional loan. On a conventional loan, you pay the bank.
Yeah.
On a reverse mortgage, if you set it up correctly, there isn't any mortgage payment to be made. So they can go into let's say they wanted a single story, they have the equity, they don't have a payment, even though they can make a payment if they like. And it's a way for, especially those elderly couples or clients that are on a fixed income.
Yeah.
Right? They're not going to be making any more income that's going to increase, and they have to take care of themselves for the future. So that's the reverse for purchase. And then very popular refinance reverse. Now, let's say you have an elderly client in the house or an elderly couple, right? And let's say they're also on a fixed income and they're barely making it, but they have a lot of equity. Let's say they need help with home care.
Okay.
Or long-term home care. They need help getting somebody into the house to help with them, and their Medicare is not taking care of that, right? And it's very expensive.
So it's a way to tap into their equity without having a large monthly payment?
Yes.
Okay.
So you can refinance their existing mortgage, pay that off, put a reverse mortgage on. They don't have to have any mortgage payments, so that'll help them.
So how do they access their home equity without having payments?
The payments are built into the new loan. So it's a deferred payment.
Okay.
That has some growth potential. So I know the first thing that comes to mind is, well, wait a minute. I don't have any payments and it's deferred and it's going to be added to the principal balance. There's something in there on a reverse mortgage that's called a growth percentage.
Okay.
That's another story. I could show the amortization chart. But ultimately, your appreciation is growing, your payment is built in there. And the last part about that is what everybody always says is, well, what happens if the prices of the values of property fall, and then I'm going to be upside down. Well, and the reverse mortgage, it doesn't work like that. It's considered a non-recourse mortgage, so you can never be upside down. If you go to pay off that mortgage and you are upside down on the property, all you have to do is pay off the mortgage. You don't have to pay the difference.
So I think I got it, but let me clarify. So let's say somebody owes $100,000 on their current mortgage, but they go and get one that's $200,000. Well, the new balance, they want to get up to $200,000.
Yes.
So being reversed, instead of that $200,000 dropping every month with payments, does it slowly build to $200,000? So let's say the next month they get a check. The mortgage company pays the buyer $2,000.
You can set it up like that. So with a refinance reverse,
that's what happens.
You have three options. You can take one lump sum funds if you like. You can have monthly payments given to you if you like, or you can set up an equity line that you can draw from,
Oh.
and actually you can have all three built in.
Oh, wow.
Whatever is going to work for your financial long-term situation, that's going to help you out.
Interesting.
And it's a way to use your equity without, I don't want to say without having to qualify for it, because it's different. You don't have to qualify for it. Like, I don't look at debt ratios, that sort of thing.
Oh,
It's
interesting.
about equity position.
Oh, wow.
But it's a way for people to use the equity and stay in their homes, because if you talk to a lot of people that are getting a little bit older, they don't want to move into a home. They want home health care, and they want to stay into their house, and their kids want them to.
Interesting. I'm sure I totally get all three options there. Quick example. Okay, I'm selling my house and I have $200,000 that I'm putting into a house that costs $400,000.
Yeah.
Take it from there.
Well, you just look at it like the $200,000 is going to be applied to the new purchase, and
Right.
the reverse mortgage covers the remaining $200,000.
Yeah.
And the payment is built into that remainder,
Okay. Which you're not making.
and they don't have to make a payment.
But it goes up a little bit. So maybe 10 years from now, when somebody dies or whatever, then you owed more than 200.
Yes, it's possible.
Yeah, because you got to
But
apply the interest.
but hopefully the equity of the house went up enough to make
That
up the
is
difference.
correct.
Okay,
Yes.
gotcha.
Yes, but then again, you can never be upside down. For
That's a
your
good
loan.
one.
It's a FHA loan. It's secured by HUD. And the CFPB. I know there's a bad rap sometimes about the reverse mortgage, but there really are a lot of insurance things into
Yeah.
play, counseling that goes into play. It's not something that someone says, "Hey, I want a reverse mortgage," and we go, "Oh yeah, no problem. We'll close you in 30 days." No, it's about a lot of conversation with the client and the heirs and the children, and having
Interesting.
you talk to your CPA and a lot of other things. So
Gotcha.
So a lot of people most people who own a house should have a trust in place, and a lot of people, the loans for folks older than 62, having the trust is still okay to get a reverse mortgage as
Yes.
well? Okay.
yeah, absolutely.
And if there's equity left, then the kids get it.
Yes.
Or me.
Well,
or I get it
yes,
because I'm on all trusts.
Whoever the
Okay.
heirs are. And that is one of the things that always comes up is the heirs are thinking, well, you're taking my equity, right?
Right.
Yeah.
Well, whether it's a reverse mortgage on the property or a regular mortgage on the property,
still-
it's
Something.
still there, and then you have the equity
Yeah.
left over.
Gotcha.
So the house can be sold. You just get the payoff like you're selling any other house.
Yes.
I think that gets rid of some of the bad raps about reverse mortgages. At least for me, it does.
Yeah, it sounds like there's many
lot.
many different options that somebody can take advantage of, whether the monthly payment, the equity line, or the lump sum. So a lot of potentially great options for those folks
Yeah.
approaching their golden years, let's say. Richard, I mean, so
I was just waiting for that one.
yeah, I had to get that in on this show, huh? So
Yeah, it's all good.
Where's
Lots
my
of
golden
details.
cane? Yeah.
lots of
Okay.
details on this loan, but I'm sure you'll have more questions. If you do, send Kathryn a message. She'll be able to answer those for you.
Absolutely.
Yeah, thanks for being on the show today, and
Absolutely.
thank you guys
Thank you.
for watching. We will see you on the next one.